Hey guys, welcome back to Northern California Living. I am Amanda Abillano. I am your local East Bay real estate agent. And today we are on video 4 and we are going to be we're going to be breaking down all the different types of loans, and we're just going to be lightly touching over each one. So in this video, we're going to be talking about FHA loans, conventional, VA, USDA loans, and even some California state approved programs. By the end of the video, you're going to know exactly which loan type may fit your situation and the pros and cons of each one, and how lenders decide on what you'd qualify for. So let's get started. So why does even this loan type matter? It basically controls everything. So before we break down each loan, I want to explain why this matters. Your loan type determines your down payment, your monthly payment, how competitive your offer is, how strict the appraisal will be, your closing costs, what homes you can buy, what condition those homes must be in, and how much money you need in savings. So picking the right loan is just as important as picking the right home. So let's chat about FHA homes. And this is kind of quote unquote the starter home loan. So these are extremely popular amongst first home buyers in California. And who FHA is great for is buyers with lower credit scores, buyers without a huge down payment, first-time buyers or anyone who hasn't owned in 3 years, buyers who want more flexible guidelines. And so the down payment for this is minimum of 3.5%. You can use gift funds and you can use down payment assistance programs. The credit score, you need to have a minimum of 580, sometimes higher depending on the lender. Mortgage insurance. FHA has monthly mortgage insurance and an upfront mortgage insurance premium, and this is rolled into the loan. Now there are property condition requirements. So FHA requires that the home to be safe, sound, and secure, meaning no major damage, no exposed wiring, no missing water heater straps, no roof issues, no peeling paint in older homes. So the cons, I would say, is that FHA is harder in markets that are extremely competitive or on a home that is in disrepair where it needs major repairs, and especially in multi-million dollar neighborhoods, because there is a cap on the pricing that you can do. So bottom line, FHA is great for people who are entering the market, but the property must be in decent condition, and the sellers don't always prefer FHA offers. So let's chat about conventional loans. So these are the flexible and stronger loans, and these give buyers the most flexibility and negotiating power. So who conventional is best for is buyers with good credit, buyers with 5 to 20% down or more, people shopping in competitive markets, and buyers who want lower long-term costs. So down payment options, I've seen 3% down, and basically it's even 3% and up. So you can have 10% down, 20% down, the more the better. And the credit score and best rates are at 740 plus, and the minimum is 620. The mortgage insurance, there is lower, so it's lower than FHA, and it can be removed when you reach 20% equity. And that's only if you are purchasing and putting less than 20% down. So property condition requirements, it's more flexible than FHA, and fixer homes are easier to buy. So bottom line is that conventional loans are more competitive, and there are lower long-term payments, and they're a little bit more flexible on property condition. So now VA loans. VA loans are hands down the best loan available, but only for eligible veterans and active duty military. So your down payment is 0% down. You don't have any mortgage insurance, so that will save hundreds monthly. Your credit scores, they're pretty flexible, but many lenders accept mid to 600s. Closing costs of some fees are capped, and sellers can pay certain costs. Remember, we are talking about loans in California. VA loans have different requirements in other states. The property condition requirements, so there's no major damage, no exposed wiring, no missing water heater straps, no roof issues, no peeling paint. The home must be sound, and Section 1 of pest inspection must be cleared, and more. So pest inspection is required, and also through the appraisal as well. So VA loans do have stricter appraisal standards, and it's similar to FHA, but a little bit more to that, but they offer unmatched benefits. So bottom line, if you are VA eligible, this is something that you should be exploring first. Now, USDA loans. This is the quote unquote rural loan. These are rare in California metro areas, but still worth mentioning because there are still a lot of areas that you can buy with the USDA in California. And people who qualify is buyers that are in the USDA approved rural areas and buyers under income limits. And so the down payment on this is 0% down. There is a mortgage insurance, but it's very low. And the property requirements is that it must be a USDA designated rural area. Many suburban areas also qualify, not limited to farmland, must be a primary home, non-investment or vacation home, appraised to meet USDA guidelines, and it should be structurally sound. Now, these loans are a little bit more complex as well. To get a USDA loan, you usually will have to take some home ownership classes, and if the home is in some sort of disrepair and it needs to be repaired, you will probably have to go through the approved vendors list to get that home work done before you close the house. And those things have to be fixed before the close of the home. All right, a little change of scenery. So we're going to be talking about California programs. And these are obviously unique to California. So California has some pretty unique buyer's assistance programs, and these change often, but we're going to talk about the most common types. So number one is the CalHFA loan, or the HFA, but we call it CalHFA. So CalHFA offers down payment assistance, closing cost assistance, and fixed rate loans. And these programs are included as the My Home Assistance, ZIP, zero interest program, CalHFA FHA, and CalHFA Conventional. These help buyers with limited savings into the market. Now, a big one that we have been recently talking about in the past year or two is the California Dream for All program. And this one is not always active. This program offers down payment help, shared appreciation structure. Buyers get a chunk of their down payment covered in exchange for sharing a percentage of future appreciation. It's extremely popular, but not always available. So let's talk about this. So this is great for first home buyers that may plan on staying in the home forever, or they don't mind once they have to sell and move that you might have to share that appreciation back to the state. Okay, so let me explain this. So if you buy a house and you decide later on to sell that home, whatever your net proceeds from selling that house, you have to share that back with the state. This is like, I don't want to be too negative about it because buying a home is incredibly competitive in the state of California. And this gives people the eligibility it opens the doors for home ownership and to just kick the landlord to the curb. There's also an MCC. So this is a mortgage credit certificate, and it gives you a federal tax credit every year based on your mortgage interest paid. So these programs are just named per state, but you also should be checking into homes that, into programs that are in certain cities. Each city also provides their own type of program for first home buyers. I highly recommend that you look into it. They do have some restrictions, but if this gives you an opportunity to become a homeowner, don't let that hold you back. So which loan should I choose, you may ask? So here is a simple guideline. So you're going to want to choose FHA if you have lower credit, little savings, or need flexible qualification rules. Choose conventional if you want the strongest offer and the lowest long-term cost. Choose VA if you're eligible. This is almost always your best option. Choose USDA if you're buying in a rural area and meet income limits. Choose CalHFA or assistance if you need help with down payment or closing costs. So what affects your loan choice in California? Your loan type depends on purchase price, city and county, your debt to income ratio, your credit score, how competitive the market is, how much you need saved, and whether the home needs repairs. And your lender will walk you through this. Thank you for watching part 4 of the home buying series. And in video 5, we're going to be talking about what you actually need to save to purchase a home. So we're going to be talking about down payment, closing costs, inspections, EMD, and supplemental tax. Don't miss out when I post it. Make sure to like and subscribe. Comment any questions down below. If you've already bought a house and you've went through one of these processes, I love if you give advice down in the comments below. So if you have recently gone through the process, I'd love for you to drop your advice down here below in the comments so other people can see it. And have a great day. See you next time.